Shall we start?
Yes, sir, please. Yeah.
Time
So
5 ಆಯ್ತಾ? Yeah.
sir, we can start. Sir.
Yeah. Namaskaram to all of you who are attending this program. I'm saying this on behalf, I welcome you all on behalf of the SIRC, Chairman Jalpati sir and Secretary Panaraj sir. And I'm Sundararajan here, welcoming you all from the region. And this is a different type of program. As such, it is titled as Opportunities in Finance, Advisory Service and Business Analysis. This is a very variety of program which has been the pet project of our chairman. He has been doing different types of different heads and different types of programs, and one of this is being this program, and in which we get an analytical on the subject of the which can be used by as a tool by the chartered accountants. And I request you all to listen to this program so well, because the speaker of the program is Mr. Mithun. Mr. Mithun Jayaraman is a qualified in revenue management from Cornell University. He led the data analytic and business intelligence. This involved implementing dashboards for key business drivers or metrics and insights of the SAP business intelligence platform, providing business managers with real-time insights for decision making. Yeah, this is a main program for decision making of a customer. See, when you want to go to a shop, you can say that I want to buy a particular item. You need to get to know about that item before you go venture into the business, before you venture into buying that product. The same way, the analytical of your requirement has been assigned to our speaker today, who will guide you on all the things. I request you all to attend to him patiently and here take his advice for the development of your profession. Thank you, sir. Here is Mr. Mithun, sir. Thank you, sir. The forum is yours. Yeah.
Thank you, Mr. Sundarajan, for a very nice introduction. And I would like to now commence with the presentation on data analytics. While this is a seemingly new field, it is one field which I feel that every CA, whether in practice or whether he wants to make a career out of this area, they can easily take up this area of data analytics. It is something very allied to us because of our audit practice and our business association with so many clients. And even if you are working in a company, your company can benefit a lot practically from using data analytics. So what I have done is to put together a short presentation, one which covers as to what is data analytics, because a lot of us are maybe not we read the word in the press a lot of times, but we have not seen as to what it actually entails. And the second part is actual business cases, how companies have benefited from using data analytics. And thirdly, I go on to what skills are required and what opportunities are available for you. So with this, I will move into the presentation. I will temporarily turn my webcam off and share my screen to just save some time. So we now move on to the presentation, and if there are any questions, you can use the chat box which may be available to you to type in questions. I will try to cover those points, and in the end I do have a Q&A session where you can ask any questions or clarifications. So we have all heard this word or this statement today, that data is the new oil, and this is very true, because as you can experience around you, everything is becoming smart in quotes. So right from home being connected with smart technology to your watch, which can today at the highest end watch even take a ECG and predict whether you're going to have a heart attack or not, or your car, which is going towards a self-driving mode. We see the use of computer and technology. And when this is there, what we see is that we automatically have a lot of data which flows. And when this data is then analyzed, because the companies, the businesses which accumulate this data, they have to use this to tailor the solution to you. So that is where the field of data analytics comes, whether it is to make a solution for you, or make a customized offer for you, like you may see on your phones with emails that come into your phone, or to say there is a machine and they want to improve its efficiency. Right to that extent, they are now interested in connecting it with technology and downloading data and analyzing to see how they can improve efficiency. So either they want to improve revenue, they want to improve efficiency, or they want to reduce costs. So these are three large areas where typically consumers work, the companies work. And the third area is also obviously the most of largest area in this, is to study customer preferences and try to increase the sale value from each customer over the time period that people are using the product. So data analytics, how it impacts organizations and business processes. I have a small video for you from Rolls-Royce, which sums it up very nicely. So on to the video. Yeah, so I will come back to this slide. I'll go on to the video. I hope that was visible for most people, but in case for some reason there was an interruption, I can play it again at the end of the presentation. So basically, uh, what we see is a company-wide exploitation of the data that is being collected from various network systems. So this is all about using data from various sources. So whether it is, as you saw, engineering data from trains or GPS data or, and performance data of various components and parts. The idea is that the company as a whole, what it does is that it gathers all this data in a central place. And as you could hopefully see in the video, that then that data goes through a very deep analysis and learning as to what, when you interconnect various data. So even here, they have even looked at weather data and seen if, a moisture or something will affect the performance of their engines, and use that data to make changes to make their engines more fuel efficient or better, or to assign in a way. We have this operations research subject in our CA course. At least I had it. So you do the operations research to make the most efficient assignment possible of say trains to passengers. Even Indian Railways is now taking this up in a big way and achieving more efficiency and lowering operating costs and actually improving passenger service. We keep reading in the press also that GST data is analyzed by the government and they identify fake bills, and then they catch and arrest the people. So this is all a result of using various inputs and data and combined view. And here we see that Rolls-Royce has used it to both improve service and to identify failures. And when you do this, typically, you also end up having better operating performance and profitability. So it benefits the organization from that angle as well. So this is all the very simple nutshell view of data analytics. So A is about getting data in. So you have a large server or data warehouse where you accumulate data from ERP, you accumulate data from Excel files. There are a lot of reports that people prepare which are not in any system. So you bring all that in one central place, and then you analyze as to which is the data that actually is relevant for you. And once you then blend the data, other data which may be relevant to the end analysis, and you have reports from which you can derive outcomes, or you can derive learnings that you otherwise will not be able to get. Okay, so we all feel this is seemingly something that we do, but however, this is not the real. So we come to that in the next slide. But this is not the end result of data analytics. The end result is to actually then, take these insights or take these learnings and then change the business strategy of the company and bring about better performance in the company. So we normally mistake also business development or data analytics exercise for a software implementation. So that is not the case, because if a software is there, you use that for data capture, you process a transaction in it. But this is not the role of a business intelligence or data analysis. It is also not a MIS tool. So, people often use the BI tool to make P&L reports because they like the way it functions, and you are able to easily, move with data much better than a pivot table. So people use it for MIS and make their regular reports, but that it's not a reporting tool either. Okay. Similarly, there are KPIs which are there. What is my say direct cost as percentage of revenue, or how much revenue per employee that I have. But this is also not the statistic or KPI that we use data analytics for. People also confuse automation with data analytics, where your manual work is replaced with electronic processing. Many companies today have, bill processing, where they scan the bill and it gets automatically accounted. But that is not the end result. So when you are doing any data analytics work, your focus has to remain on strategy and performance enhancement. So that is basically the key result or outcome of undertaking a data analytics program in the company. So the impact of a data analytics report or programming comes in 3-4 areas of the company in a broad way. One is it gives a lot of insights for revenue management. In many companies, revenue management is not so strong in India, but especially in SME sector. But this is something that CS can bring to that sector, and I personally actually I am dedicated to working for the SME sector. I don't want large projects, and because I feel that a lot of smaller companies can become bigger if they use these tools, and they are able to then implement revenue management strategy for their products. Analyze, it should be used to analyze competition strategy or frame a business strategy. The efficiency comes also from a manning perspective, where your planning, decision making, operational synergy happens because all your data is in one place. What happens is there is no fighting within the company. For those who have worked in the corporate sector, there is always sometimes disputes between why a certain thing happened and what should be done to solve it. So there are always, we all know the traditional disputes between finance and sales. Now, your platform eliminates those issues because people can see the result directly. There is no other explanation that can be given for an event because your data is very transparent. Further, it can also be applied to other, areas like internal controls. Even you can monitor energy consumption, for example, and optimize that. And you can also drill down individual report into details of individual reports. So here what happens is that even individual departments can track their performance in real time because they are connected with the data, and decisions get taken faster, right? So till here is a small overview of what data analytics or BI entails. So one is to understand the data and how to use it. To create a data lake where there are multiple sources of data and you accumulate all the data. You handle data errors and then come and prepare the final data that you can analyze. And then you have a platform to share the information in real time. Okay. So at this point, if there are any questions, you could send it to me on a chat, and I would be happy to uh, uh, take take questions on this, and I will answer them post the next session. So data analytics actually presents very good opportunities for CS. For firms in practice, there is always the opportunity of value addition that can happen because you can tap your existing client base. You can offer this addition as a service which brings to them operational efficiency, cost efficiency, revenue management, and you can also be a more informed person in advising them or practicing them because you have analyzed a lot more data than you would normally do in, say, an audit. Even from an audit perspective, it is a very good professional tool which can be used to minimize your audit risk, and it's also can even morph into an additional area of practice. Uh, so we will see examples of this as we go along. Uh, Similarly, as a career opportunity, now many chartered accountants are there who may not want the traditional role of doing actually accounting or tax work or audit. So for them, this is a very exciting opportunity because they have already experienced probably in work or at work what a business is, and they can have data analysis as an additional qualification or become even a data scientist by doing an additional degree and then entering into this field. So this field is one of the now largest growing fields in the world, and there is a large demand for data analytics and data scientists. And so whether your career is overseas or in India, there is a lot of scope for professionals, and the number of professionals in this area are still limited. So the entire orientation, actually, if you see the new firms like you see Swiggy or you see Zomato, they are now very different organizationally. So previously, if there was something to be done or a system had to be changed, you would go and make a analysis after the event. You would go and then study a process, look at it, make a report, and do that. But however, with this kind of strategy and this kind of deployment, what has happened is that you have a data-driven strategy where your decisions are based out of the data analytics that is present in your system. So you are then using this as a tool to look at various data and to make customer innovations or change your business model. And in this way, the company is also more dynamic. It reacts much faster to change. Now, breaking down data analytics, there are many, while there are many tools, basically what happens is the methods that are used are basically statistical. So you classify data, which you would have done, in which you would have seen in normal statistics. You classify data, so by, let's say, by age, by male, female, etc., gender, and here also you have then additional more advanced methods like clustering, where you build group similar data together. Okay, then you go on to regression, where you are trying to predict outcome, and you also look for association rules, which I will show you by way of example. So by chance, if there are relationships, so this we see a lot in Amazon. So if you have opened Amazon and if you buy a product, you also see that people who have bought this have also bought X item. So if you buy, for example, if you buy a mask, you will get a suggestion to buy a hand sanitizer. So how does Amazon know that this is the product that they should additionally recommend to you? It is because of using association rules. And that is what we will study now by practical example we will see from the next slide. Okay. Uh, so this is an example of clustering data. So when you cluster data and you group, now this is data of a hotel, okay, and the revenue of the hotel for 1 month of July. So here you have three aspects being analyzed. One is the time period, which is the month of July. Uh, you can see this from 1st July onwards to end of the month. You are then seeing the rate here at which each business has been picked up, and you're also seeing the source of the business, the type of business, and this is being organized by the size. So we are now seeing a depiction in terms of a graph that which business produced which size and when it occurred. Okay, so for example, you are seeing one large bubble here. So this means that the business was done around 4,000 rupees. And because I have previously seen this data, this involves a ship crew. But however, this business is done at a very low rate. And you see some observations, immediately if you closely observe, you will see that the bulk of this business is below 6,000 rupees. Then when you look even more deeply, you will see that it is largely between this band of 4,500 to 6,000, and some large business has been picked up at this rate. So you now see a classification that ship crew, and you are seeing a volume, larger volume of business. Now if I were in the software itself, I could, by pointing my mouse, the system would pop up that what was the revenue that was made, at what rate it was picked up, etc. But what it does tell us is that there is only very little business being picked up at more than rate of 4,000, 4,500. Okay. So now my attempt as a revenue manager would be to try to move each point of this business upward because I want to make more money. Or I can have a strategy that I need big revenue if at a lower rate. So which is the better strategy would be the first question that would be asked to me, and what I would try to analyze. The other thing that you can see is that there is something called third-party booking, there is something called corporate business here, and there is direct business here. Now, typically in a hotel, this business should not cluster so much like this. Now this has happened also due to COVID. For example, third-party booking should not be available at the same rate. That third-party booking is basically what business you or rates that one gets on booking.com, etc. It should not be at the same rate as let's say a ship crew rate. So those deficiencies also can be picked up. So for example, now I see two straight away that there is a hotel website. Now this hotel has priced its rooms on its website at 6,500, 7,000, but on the online sites it is giving at very low rates. Okay, so this is a mistake because for all these rooms I pay commission, and if I had kept the rates at the same level as the online rate, probably I would have taken more bookings on the hotel website. So this is something that gives me an indication of pricing of business, and then developing a rate strategy from here. So here we see a practical example of how data is clustered. So again, there are ship business. So there is one business of a wedding which has come here, which has contributed so much to revenue. So in between this period to this period, the hotel actually suffered for want of business. So whether I should have cut my rate lower than 4,000 or 4,500 and benefited is the point that is there in question. Okay. So while this is a post analysis, there is also ways to analyze this in more detail. When you deploy analytics, you will see the business which is existing on the books on a particular date. Okay. So after clustering, we have a regression analysis, and statistically a regression analysis tries to fit the value between a dependent variable and an independent variable technically, and the higher the correlation, the higher the possibility, or the, in this case, because it is product linked, this is a restaurant analysis. Now here we have done a restaurant analysis, a menu and sales analysis, and we have used regression to try to see that which are the customer preferences and what should be sold to them and what will sell and what are the gaps that are present in the system. So you have uh, 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 soft beverages, so these are numerically 99 in number. Then you have this item beef, where you observe the correlation is very high, so a lot of orders have beef in them, and that's a clear preference trend. And you are also seeing the R2 is the strength, statistical strength of the relationship is also high. Okay, similarly you also pick up some other items which are here. So for example, you will see a correlation of 0.5 here in biryani. So biryani is also a preferred item. So as a F&B manager, it tells me 2-3 things. That one, in biryani, person is looking at a particular price point to be fulfilled. He wants to eat that one dish and be done. And for beef, it tells me a preference of choice of item or cuisine. So then I should have that product readily available throughout my menu. So what happens is that when you go down and drill down into the menu, so for example, when you go and then pick up only a particular item like sandwiches, what you see is that your beef is first missing in this lineup. Okay, which is the first gap. So you should have sandwiches or burger or product with beef, which would then help you take up sales revenue. So that's the first learning that you get, that something is missing from your lineup. And the second part, what you see is that you see the orders of various items, and you see them clustered around particular price points. So the average, so you have an average per cover, which is approximately the pricing of that individual item, and you have the bill amount of the item, where you have that what the final bill came to. So in between, so I have two options as a person in food and beverage. We can either work out on value or we can look at volume. So here I can look at volume by also increasing the missing product, which is beef. And the second part is to see if I can take up this average of the product of the item. Probably I should create a new sandwich, or I should create a sandwich which is more affordable but which will sell in larger number. So these are two combinations I have, and these lines are sort of a line of best fit. So whenever I sold this product, I have done well. So it tells me that also. Then I should also analyze these orders and see if something went wrong in the combination of items that I'm selling, so that I get a higher bill value from this. So here you see probably the item being producing an overall bill of only 500 to 1000, which is not ideal for a 5-star restaurant, which is the case here. So here we are actually able to study the business problem in detail, and we are able to see as to what solution we have to fit. This may very well be just a timing. Person may have come at 4 o'clock, but then that has to be seen, and had a snack. So he has had one item and finished it. But did his bill have a coffee? Did I sell him some other item as well, at least a beverage? That is my next question, which I can delve into and then take it up with the staff or the sales outlet to try and offer this to him as a combination of items, so that to make him spend that little bit more, which will give us more margins. Because for a coffee, your coffee, the typical cup of coffee costs only 8 or 10 rupees to make, the best coffee, that is. And in a large hotel, you can sell it for 75, you can sell it for 100, 150, and the rest is your margin directly. So we all hoteliers love to sell you a beverage. They wanted to drink juice, they wanted to drink tea or coffee, and because it will directly increase their profit tremendously. So that is something that will be studied next from this analysis of regression. Now we look at association rules. So this is typically the Amazon type of selling. So I have just put up an example. So you see a table here in front of you where you have a item, popular item, and with what it was sold, and actually how much the total bill amount turned out to be, from all those orders. And you see the individual value also of those orders. So for example, the combination of this curry and the chapati gave us approximately, let us say, 9,000 rupees. Okay, and the next best combination was with rice. So then, as a planner, I will start planning. Okay, is this the optimum combination? Should I have increased my price? Should I do something more to this? Is what I will naturally start thinking. So, to give an example, so in this particular place, the Kerala paratha is priced at 125 rupees. So my suggestion was to make it to 200 rupees because this is an item which is ordered in quantity. It's like a staple. You go, you eat rice or you eat a bread item with your and everyone orders it. So even a small increase will give you a large payback in terms of bottom line. Okay, so this is also useful from handling, let's say, the customer, because okay, if he eats this, okay, what all I can suggest. Okay, I would definitely try to not have this combination of sweet and the curry, because it means that probably somebody he has not had an optimum meal from my standpoint, from the point of view of a seller. So I will look for some combination choice or menu also here to do this. And when you start doing these association rules, you also learn as a business so this can be any product, just as you can see in Amazon or Flipkart or something like that, where you buy a phone, they try to sell you a charger, or they try to sell you a USB port or wireless charger or a case. This is similar to that. So it is applicable across any industry, really, as a typically across any industry. So now I'm coming to examples closer home, where people there are auditors who may want to use it for internal or even statutory audits that typically are there in assignments like ours. So we can use the data analytical tools. You have a lot of software also which is free. You have, if you search that net, like Power BI, the desk, which is by Microsoft, which is an easy to learn software, is available free of charge for desktop use. So it is just like, and it's very simple in terms of its learning curve. Anyone can load data and make reports, and fairly good reports for analysis. So you can use, for example, you can you analyze a process failure or a non-delivery. So instead of typically looking at a statistical based report, you look at a more detailed level report in this, and you frame the number of occurrences, what are the reasons, and what are the points of failure, and help the business overcome that point of failure. So you can see that, for example, the highest occurrences were 50, and that was insufficient packaging, and the lowest was a missing packing slip. So you have identified, okay, these are the number of instances overall, and that's percentage of total. So we don't know the total population, but this analysis is very useful for a client to start going to the next level and start tweaking his business and reducing the occurrences. So here is a case of a hotel where we had one large property in Taj. So there is a call center and there is a hotel reservation office. So if you call the call center, you get a one rate, and if you call the hotel office, you get another rate. Okay, and on the same day for the same business, hence there is a possibility of loss, notional loss in a sense, because each one does, left hand does not know what right hand is doing. So this analytic helped actually plug a very large leakage in revenue in this particular hotel. And we also even had a case where there was a large MNC. They were not calling the hotel, they were booking through an agent. And this was simply because nobody had actually bothered to call the company and say, we are observing this, I'm here as your representative, just send the reservation to me from next time. Had that happened, so much commission would not be payable to booking.com. So this was lost in the tons of data that is generated typically in the business, but it was picked up because we did this analysis and we saw that this company is actually reserving in this way, and it helped to reduce the leakage from point of view of commission expense to them. So it is actually very expense voucher analysis is one of the most favorite I think examples which everyone will give. And companies which have implemented such a system, there are which track these expenses and which highlight overspending or such usage, or in track the patterns, they have reported a lot of savings once such a system is employed. So this is another level at which the analysis can be done. So whether you're looking at internal or stat audit, this should be mentioned. Definitely, you should encourage clients to put in place such systems. From an audit perspective itself, there is a lot of refinement in terms of the documentation and also forming conclusions and actually reducing your risk level, because where you would take a ledger account and previously you would study only a portion of the account and then form conclusions. Now you can study 100%, 100% of the transactions. You can take KPIs, or you can ask your customer to give you those KPIs, where the audit becomes smart. You save time, the client saves time and the pain of documentation, and you can actually spend more time where it is required. And in terms of internal audit, also you are having a very precise audit where you can quickly identify what are variations or outliers, as we call them in data analytics. There is a lot of audit efficiency, as I mentioned. There is also digitization, and backup, and it also helps you. It helps your client and reduces the paper work that is involved here in this. So there are more and more diverse examples. So here is a case example where I have looked at an agro distribution company, and actually the entire strategy changed, because the analytics was employed. There were a lot of areas that the company was not looking at, which came to the forefront once analytics work started. And so some of these I will tell you. So now we found that this company has a lot of sales points, but not everybody was actually focused on the company and the product that the company had, because the sales value was not proportional to the number of sales points. So in some states you had smaller number of retailer or distributor, and the sales value was better, but where you had larger number of dealers in some states, as you can see here in this area, you found that the results were not proportional. Further, you found that some dealers are doing most of the quantity. So this gave an opportunity to streamline on the distribution, the costs, advertising support, or to even pull up certain dealers, or to change dealers in certain areas. So a lot of actions could be taken from this perspective to improve, and it was reflected in the business results also. Once this exercise started, people could see that there is change needed, and that brought results. So this is a similar point. It's an easier view perhaps of the same thing, where the chart is putting up the sales volume and also the average number of retailers and distributors at each location. So for each location, multiple locations, this could be mapped. So typically, you in most companies don't get down to, at least at SME level, looking at performance like this. They are more used to saying, okay, so much volume has been sold, whether we have collected the money or not, and we should increase distributor or retailer left, right, and center. However, that may not be the most appropriate strategy for you. Okay. So so there could be different things which came, like cannibalization, or two stores being very close to each other can also produce a problem. Okay, so this company then decided, okay, it's time, and I also suggested to them, at this level it is not enough. Let us start using GPS and let us start analyzing stores from that perspective. And so this is actually what can happen. You can click on a particular city and it will then blow up the sales volume and quantity. And we started to analyze it from a geographic perspective using the GPS of each sale. So when we did that, we found, like you see in the stock markets, this is a heat map. So we found clusters like this where there are heavy sales or hotspots, and we found smaller places where some sales are taking place, but it is not to the extent that is desired by us. So we could see that we are not present here or here, for example, and we started going down to the next level of this cluster. Okay. So we then, because of GPS, we could analyze at the road and street level whether what are the sales volume, what are the and where the sales points are actually present. So we found some learnings from here. We found that wherever larger towns are, they are having large sales, and wherever there is more than one sales point, also you are having more sales. Okay, so logically, what we could see is that the farmer is traveling from this area, say, to this area to buy the seeds which are being sold, and probably they are not aware of sales points which are here, or you need more sales points from the place at which they are actually coming from. Okay. And we found that the distribution reach is not as good as we thought it is. When you have a briefing, we were told, we have very good distribution, but here that was not the case. You had clusters at large cities, but you didn't have one level below that. You didn't have sales points or awareness of the product, and it was a dealer who was pushing the product basically. So that changed the viewpoint of the company. The second viewpoint the company had is that they had an idea of competition sales. They thought we are doing more sales than the competition, which also didn't turn out to be the case. Okay. So this is the retailer presence, and we have identified roads or points where gaps are there, which if addressed could produce more sales within a sales territory. Okay. So we found also where single retailers are there, sales is low. So that person is probably having some other product, and this also questioned, then if he's not selling our product, then whose product is he selling? So that question brought about the view that probably our figure or our expectation of competition sales is not correct, and actually competition may be actually selling much more than we thought what we were selling. So this could practically be realized from this visual. So we also saw new areas where coverage can be there for a particular cluster. Plus we could see also a the volume. There are single sellers, small volume, more sellers, more volume. So that is what we could see, and we need to then go and see that where we need to be present and where we need not be present in detail. So once we work it out based on this kind of methodology, we are sure to succeed. There is very little or lower chance of failure once an organization has analyzed and it has visualized its supply chain like this. Okay. Further, they also gave me GPS of competition, which didn't match with where we were selling. So it meant that there is some issue out here, and we need to examine this in detail, right? Even a product sales view. So the company thought that its product sales was optimal. It was not the case. So we were only selling a couple of products, but we were shipping by truck at least 9-10 varieties, but selling only 2 varieties. Those balance 8 varieties used to come back each year to the warehouse and used to be destroyed as stock loss. So that figure nobody took into account in the profitability. So if you took this and you shipped only what was required to be sold, you would save a lot of cost, right, from the production to distribution especially, and reverse logistics of shipping it back. The other revelation that came is that if I have to send a product to somewhere this side, I would be shipping it first to somewhere in Delhi, and then I would be coming and shipping it to the other points. And I would move the stock back the same way, which meant that I'm paying more in transportation cost or distance cost. And that was also a loss for the organization. So what loss they thought was in the 1 or 2% now suddenly became bigger, and it stood at 8-10% or even more when you looked at the stock losses. And it opened their eyes that, okay, if we become efficient, we can save at least, even if we save 5%, we make many crores more, okay, directly. And they started to improve the strategies on both sales and distribution of product. So the eyes opened up, and we found, we could crystallize our strategy for one region, which we had done at that time, at these 4 or 5 main points of action, and that is where it integrates into strategy. Okay. And we found, as I just mentioned earlier, that some distributors were even returning 50% of product, which doesn't make any sense at all. Actually, then store the product, make it, ship it to them, bring it back. It didn't make any sense at all. So we saw clustering of sales in a particular region. We saw retail presence also, and we saw concentration also. So it gave various points of action, among which we wanted to start more retailers, reassess the competition and potential for a zone, and optimize also the sales in the regions where we were not selling. Plus the shipment optimization and the reduction in returns were a major opportunity for improvement of profit for the company. Okay. So this is what we could see from our analysis. So I am now moving on to the next section, that if somebody wants to enter into data analytics and take this up, what qualification does he additionally need? So let me start by telling you I am not formally qualified in any of data analytics. Okay, despite having done so much work, it has all been on the job learning, and wherever I have got stuck, I have looked up the net and I have read some recommended book or the other, and then learned how to get the job done. So for somebody to take this up in a real sense, if you are making it as a career, then probably I feel you need to do that data analytics qualification. However, if you are going to use it in your existing business improvement, etc., This is not really something that you need to qualify on. However, you definitely need to know the concepts and start working with data analytics software, and then the subject itself should take you deeper. If you wish, there are a lot of courses, entry-level courses, which are available on Coursera. Formal courses are available at larger universities also as online courses. Even IIM Bangalore or IIT, I think Bombay does courses online. And there are many courses that you could take depending on your need. You can select a course also, and you can have that certificate also. Definitely, if you are going to look at a data scientist role, then probably you need to know lots more of statistics and its use, and that is something that you would look to do. From a industry perspective, if you're looking for a job, you have three players in data analytics. You have a data engineer who is basically coding and doing that activity and working with software. If you're a data scientist, you're probably looking at what should be analyzed and what is the techniques that you should use to analyze the data. And as a business analyst, your role is to understand the business and then tell as to what should be analyzed or what metric should be brought up uh, 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 in data analytics. So you have, from a field perspective, you have mathematics, you have computer science, you have analytical orientation, of course, is necessary, and you need domain knowledge of the business. Okay, so this is typically a very interactive role between various professionals. I don't think anyone can claim to know it all. Okay, 100%. But as chartered accountants, we definitely do have at least the domain knowledge, and we definitely have the aptitude for doing the analysis work and statistical work. And if you want to go into the higher realms of data science, then for that a course is definitely available, which you can do, which is highly statistical oriented. And this is definitely essential if you want to make a career as a data scientist. So this is the job role, or which typically happens in data analytics assignment. You have a data scientist, and they are basically the statisticians who will look at the data, classify the data, help you build that data warehouse in a logical manner, and create models from which results can be drawn. And they will use highly program-oriented language like SQL, Python, or R. You have data engineers who are actually engineers, so they will, massage the data. They will help you process the data, etc. Where our role as CA typically lies is more as data analysis, business analysis. This is something that we are already doing. We know logically what things should be looked at, but definitely our skills we need to have, and we need to have those extensive skills on Excel. Some SQL will definitely help, and you have tools or software like Tableau and Power BI. You have a lot of free tools also, which we can use to prepare graphs like the ones I have shown you for analysis, and then to look at that data, understand that data, and interpret as to what needs to be done from the point of view of a company strategy or whichever the end result may be. So we may not really get into, unless some are interested. Today, a lot of cross qualification is possible. So we typically don't need to get into a data scientist or data engineer role, but if somebody does have the aptitude and they like what they're doing in this field, they can definitely get on and jump into the data scientist qualification, which will take them up the path in the industry. So there are various data science courses available on different software, and you can learn all that online. At the first Lower end of the scale, you have your data visualization, you have forecasting analytics, and then you move on to more statistical and advanced concepts which are available today. From a perspective of market, this is something which is now growing exponentially, and already it's around $122 billion with, there's a large salary scale available for professionals, and based on experience, one can, I think the sky is absolutely the limit. I don't think there is any limit, though there are some numbers here. Okay. And data analyst course, typically these are the streams and the skills of people who do a data analytical course. So they can be graduates, but however, I think professionals like us would understand and derive more value than just doing at a graduation level. Even a graduate can take this. There will be a skill which they can employ at the right time in the future, and that's something that one may decide to do the course. Okay, and this is a list of all the software and open source where available, which can be used as platforms. Even if you want to learn, you have Power BI, you have Zoho Analytics, you have Google Analytics, which is not here, but which is a very big platform, and I have used them, Google also, apart from Power BI, and you can use it absolutely free of charge to look at data, your client's data, analyze the results, and get a flavor of analytics as a whole. I'm now open for a Q&A session. So if anyone in the audience has any questions, I'd be happy to take them.
I will share my screen. Is my screen visible, sir?
Yeah, I can see a screen. I think there are some questions which are there. So what are the software tools to help in doing BI or data analytics? So as I just mentioned in the last slide, to first start you off, I would recommend Power BI or Google Data Studio. One reason is that these are both extensive platforms. These are free of cost, okay, to you to use on your desktop individually. Google Data has a size limit, but however, even that size limit is per project, and it is fairly large. A very large volume of data can be uploaded and analyzed into that. Next is what resources are required for data collection and analysis. So for this, basically, you need to have a database. So here, data collection means there are two parts. As we saw in one part of the presentation, your software is to be connected to the ERP. So even you can connect it to Tally, you can connect it to a QuickBooks, you can connect it to SAP, or any other ERP that may be used. That is one source which is most commonly known to all of us. The other can be also specialized software, like a restaurant has a POS terminal, or every industry, they have some specific software, or they have some sales management software or analysis software. That particular software is also an input for us. Thirdly, lot of data we find is not from the ERP, but people are preparing it in Excel, and they are not using this data alongside other data to enrich their analysis. So that data also is something we have to collect. Actually, most of the useful data is unstructured, as is the industry term. It is all in Excel sheets here and there, and that can be unified by using such a data platform. So specific courses to suggest to become a data analyst or scientist, I did cover that in part of the slide. So there are courses available from Coursera, there are courses available from reputed universities like IIM in India. There are even overseas institutions which are giving you these courses. There is Great Lakes, which is giving you this course. There is foreign universities like Cornell or New York University. A lot of them are, or even British universities, which are giving you, when it comes overseas, the course. Okay, so the next question is, if there is a SME company and they don't have an ERP, how do we capture data? So I would first recommend that the SME company gets on a ERP platform, because that is something essential in the long run for them. Okay. Now here, when we say ERP, because most people, they can at least afford Tally, I presume. So even Tally data can be exported and used for analysis. It can be directly connected also. And if they are not using ERP, they must be maintaining accounts on some kind of system. So whether it is a traditional software or it is Excel sheet, even that can be directly imported into Power BI or other model and linked and used. Okay, so this is another part that we can handle. Typically, because now these systems are available on rent at low prices, even there is QuickBooks and Zoho and all, they give you the monthly for 3 or 500 rupees. I think the first thing to do is actually migrate these companies on at least that kind of platform. So the next is a percentage of success or decision or strategy that so here I don't think anyone has done such an analysis, to be frank, but here because your basic strategy is derived from a hard data analysis. You are not doing this based on gut feel. You are actually seeing a particular consumer behavior or a particular pattern. I would say the failure result or the strategy level that you see is very low. So for some, to give an example, like we saw in the company, seeds company, which was shipping seeds all over the place and actually not selling them, the decision to stop it is directly a good decision. Okay, so we would be able to also map outcome of a result also before we take any decision, or at least what is the expected outcome. If at all, if you actually see data analytics usage, you are seeing today Google and actually even Apple, how they make you buy an entire ecosystem of products. So both are very different strategy in terms of pricing, but you see that they first launched YouTube as a free channel. It is still free. Now they show you ads. Now they also sell you a premium subscription, and then now they send you a bundled subscription. So all this is coming out of analytics. A lot of the employment today is still on the revenue sales side. So people take a punt with the revenue, saying, okay, I'm studying this, I think this will make so much revenue. If it is unsuccessful, they stop it. So they don't. I have not actually come across a case where out of analytics something has gone wrong or substantial loss has occurred. I see that there is still time. So one thing that I could do also is to give, if it is okay, a quick overview of Power BI tool. So somebody can actually experience as to how the reports work, rather than look at the presentation. So I will just start the Power BI. I think there is one more question. Yeah, sorry. Yeah. Yes, so skills needed for interpretation of data and strategy formulation. I would say common sense is the most important requirement. And yes, if you have been widely exposed to industry, either as a professional CA or by virtue of your work, and you have to actually learn the business to be able to give a strategy to a company or to suggest a strategy to the company. But I think that becomes the most important skill, if you ask me. Skill for doing this, definitely you need to have higher level of computer skill and be able to move around with data, etc. Yeah, there's one more question on the role played by BI in forecasting. Uh, so I do not know how many were able to see that video in the beginning of Rolls-Royce. Okay, so forecasting comes at the higher end of the spectrum in analytics. So here you pick up any item. So for example, Rolls-Royce, one of the things they analyze is the failure. So we have industry standard for this. We have mean time between failure, and we have then because of that the corollary, the failure rate. So they started to predict by using. So I'll give a very simple example. So there is a company with which I'm associated with, or which does temperature monitoring. Okay. So now all these fast food, not fast food, hotels, and you have grocery stores, you have freezers. Now every time the freezer fails, they lose 4-5 lakhs of stock. So by fixing equipment that monitors the failure and alerting the technician, you are able to save that loss. And uh, uh, and that is something that you find forecasting being employed to predict when it will fail, because by the number of hours run, it first came to at least once every month per store, and once these were fixed, it dropped to once in 6 months. Then we could see that, okay, schedule the technician visit so it doesn't happen. So that's the thing. Okay. Do you see opportunity for mid-level management resource to shift to data analyst roles? Case in point is myself. So I quit my job and I started being a data analyst. And of course, yes, one big plus is that I did do that job in my organization for some time. But yes, definitely, I think it is better for a mid-level management person to shift because there is much more experience and exposure. And it is unrelated to, I think, whether you are I think a CA is a very good added, in this business. If you are if you are a CA and you are able to do a data analysis role, I think it's quite optimal.
Yes.
So I'll do one thing. I'll just for a second, I will just see if I can show you. Yeah, 1 second. I will just I can take any other question the moment it just loads Power BI. So I can just show that there are a couple of views as to how it actually works from a practical perspective. From my perspective, I think this is something which every CA should take up. At least whoever is in practice, definitely with their clients, they should obviously first you need to be able to use it. But I think once you employ it, I think you will find a lot of people benefiting from the analysis. So this is how the software looks. It's a very quick overview that I will give you. Probably, sometime later there can be a more detailed analysis. So this is basically the data view or statistical analysis of a restaurant's bills, which has been done from various perspectives, business perspectives. Okay. So for as data, basically the company has given me a dump of the data, sales data, and it has been then tracked in various modes. So as you can see, we have an option to get data, and these are from various sources. So you have SQL, you can connect it from a text or CSV file. You can also have linked to various other forms of database, or even data from the web, which can be linked together to get you the items that you have. So you have a lot of platforms which are here, and with which it is compatible, and you can use that to import your data. And when you import your data, it looks like a normal Excel sheet, you know. So this is all the data that is there in one of the sheets, and you can then start looking at the chart that you have. So here for them, I have built what is I have called as a price browser. So based on the category of that item, so I can then look and see that, okay, what value that item is doing. So I'll make it a little more easier by coming and sorry, I think screen has popped up. 1 second. So I will just, so you can filter data now by various things. So I can choose, for example, regional menu, and only that menu will come. So this is a hotel located in Kerala. So you can see that, you know, the regional menu is more popular, and you can see at each price point what the sales are. So that is where I came and said, you know, that 125 rupees example I gave is from here. So any 25 rupees increase in price also will give me a disproportionate increase in revenue. Okay, and that is something that I'm looking to tackle. So we are looking at some items which are, you know, now you're able to see that dosa, idli, what are the sales for that, and they are sold at 325. So I'm not touching that price point, but definitely I want to touch a price point where, you know, like there is a dish at 450. Now I'm seeing 400, 450, 495. So I would like to eliminate 450 price. I would like to take it to 500, and that way I would make more money. So these are suggestions that can be done based on that sale. So here I'm seeing two levels of data being presented on one chart. Now I have features like I can drill down on a particular item or data. So I will try to get into that also, just as an example. So this is, for example, correlation. Okay, and here you can right now, first, this is too much information for me. So I want to see only what is being sold at, say, lunch and dinner, and I want to see only, say, appetizer, you know. And now I can see a much better graph, and I can see the actual item which has been sold here. Okay, and whether it has been optimal for me from point of view of billing, and how many bills have with those items have come at a particular price. So you have a various ways of filtering out the data to give you better and better understanding. So if I take out now, I can take out, say, only chicken. Okay, and I will see only that sales here, which for somebody who is into the pricing is very easy to understand. Another way of presenting is actually you make a tree of the price. So basically, if you are then, you know, you're choosing a particular thing, you are able to see that average, what is your pricing and what is your realization from that, you know. So now it is, I've chosen regional, and it is breaking it up to be in terms of the courses and etc. Which earlier, yes, you can do this from a Excel sheet, but it will take you many Excel sheets to get you to this this level. So that is where it helps. This is an example of classification data, which we typically do. So it is now classifying between range of prices and what has been sold. So that is giving us some very good examples here. So you can also have features like, there are some uh, charts which tell you whether you have priced optimally or not, and so on. And you can have the flexibility of filtering out on various data category or elements. Okay, so that was a quick overview of the data analytics platform as well. And anyone who is now using any other software will find a similar way of filtering data and tools available to them. If there are any more questions, I'd like to take them, or I can wind up here at this point.
No, sir. We have taken all the questions, sir, so let's move to the next session, sir.
So, sir, with your permission, I can conclude. I'm slightly early, 5 minutes early. But if there's any other thing, I can have a session on that.
So you can stop the screen sharing part, sir. Thank you, sir. We'll move on to next session, sir. We have taken all the questions, so
Thank you, Mithun sir.
Welcome.
Yeah,
Thank you
Mithun.
again for the opportunity. It has been
we have learned a lot of terminologies like data scientists and other data scientists. We have seen only scientists and not data scientists, but we have learned this from you. So we have a lot of things we learned from you. I think it must be much useful to the members of this profession. And to proceed further, it will be very useful, sir. Thanks for your wonderful presentation, sir. Thank you, sir. Thank you.
Thank you.
Thank you, sir. Let me welcome Shri Ravichandran, sir. Namaskaram, sir.
Namaskaram. Good evening, sir.
Good evening, sir. Let me introduce Mr. Ravichandran, sir. Mr. B. Ravichandran is a postgraduate commerce and associate member of Institute of Company Secretaries of India, a law graduate, and PG diploma in computer application. So diametrically opposite, sir. You have to learn a lot of things, and you've gone to the computer applications. That's great, sir. He had successful, because basically we all do science and analysis, everything, and then we learn the law, but we have come the other way. Thank you, sir. So you have given us one lead, like we can do anything for learning, and
Yes.
at any time, anywhere. Thank
Yes.
you, sir. He had successful career in the corporate sector for 15 years, and his last designation was Senior Vice President Finance and Company Secretary. In total, he had served for 36 years of experience in the finance, and today he is going to give us about the one second. He'll be giving us an finance advisory services about financial advisory services. Thank you, sir. The forum is yours, sir. You can continue.
Thank you, Chairman. Good evening, friends. It's a beautiful opportunity. I got to talk about the opportunities for CAs in financial advisory services. Am I audible?
Yes, sir.
Okay, fine. Basically, I think the major audience should be young chartered accountants who have just graduated and trying to get into their audit or job, or they wanted to know what is the life looks like after clearing CA with flying colors. So I congratulate each and everybody who has recently passed, and I welcome them to our fraternity. Basically, before starting that, I just wanted to give you a small brief about my background. I've started my career from the police department, then went to the central government, then into the private sector, then became a senior vice president. Now I'm the CEO and the president of a firm, Lalita Financial Services in Hyderabad. We have been catering to large corporate syndication, mid-corporate syndication, structuring, restructuring, international arbitration. That is our USP, what now we are doing. So I would like to emphasize on a lot of opportunities what a CA would like to get it after completing his course. See, all these professional courses will give a beautiful platform for you to fly. There is no end for it. Absolutely. And every day is a learning day. I mean, you can learn new laws, new regulations. The whole market, the global market is a global village now. There is beautiful opportunities. We never saw this much of opportunities maybe 15, 20 years back. Now just click on a button sitting here, you do a arbitration sitting somewhere in New York, international arbitration or a Singapore arbitration or London arbitration. And you know how much you're paid? You're paid $800 to $1,000 per hour. That is fantastic. I mean, so what I wanted to talk to you is first, there are a lot of SMEs and MSMEs in India. So what happens? They will not be able to appoint a full-time chartered accountant or a CFO paying 1.5 lakhs or 2 lakhs of salary. So they would like to certainly take the services of a chartered accountant, preferably younger chartered accountants, because they come a little bit cheaper compared to very senior people. Their role is to help the company in finalizing the CMA, that is a credit monitoring analysis report, which has to submit to the bank, and monthly stock statement, quarterly stock statement, and help them in license and correspondence with the bank, and also help the bank to get all the information from the SME and the MSME sector. What happens is when these companies, because of their crunch of the funds, they look for people who can spend 2 hours in a week or 3 hours in a week. I mean, very small time is spent, but you have been paid reasonably well off. So this is a beautiful opportunity for people like you to get into an area of financial advisory services. Because what happens when you start working with a small corporate, small company at the initial stage, once those companies grow, automatically you will grow. Because they are not going to be sitting like that. They will certainly grow and they will expand. Once they expand, they come back to you again for funding, all the other requirements of finance. What I personally feel is whenever I complete one particular slide, what are questions you have? Why can't we answer it like that, or you want to take it at the end? Chairman, what do you suggest, sir?
Sir, you can take it at the end, sir.
Okay, fine.
That will be better, sir. Thank you, sir.
Okay. Can I have the next slide, please?
This one.
Okay. Then there is yes. Then there is coming another chapter. The another scope for CAs is techno-economic viability reports. What happens is all these banks now want a techno-economic viability report first to be prepared by the company and then submitted to the bank. After that, they give it to an outside agency. They also prepare the same techno-economic viability report. And then they will send it to the bank saying that whatever the report has been given by the company, it substantiates and the project is viable and it can be funded. So what happens is techno-economic viability report is normally runs around 150 to 200 pages, depending upon the company, the profile, normally in a normal company. The first part completes, has the project and technical details, the company, when it was incorporated, the promoters, their background, their education, this thing. Then they talk about the technology or the technical details of the project. If the cement product, what is the basic raw material, where it's sourced from, what are the machinery they are going to import, and whether there's any joint venture, and all these things will come into the project. And then comes up the market survey and the peer group. Here, some of the things we will not be able to do as a professional because this is a technical subject. So normally we go to APIDC or any other professional people, and they do a market survey and give you an analysis whether this product, if it launched in the market, will be successful, and how the peer group are doing, what is the cost for them, whether you will be able to manufacture below that cost or whether you will be able to compete with them. All this market survey they do and then give it to a report. Then comes a very important thing is the financial structure and project. That is what is the project cost and means of finance. So in financial structure, what happens is that is where the chartered accountant's professionalism comes. It's not just equity, plain vanilla equity or debt, and then you close the chapter. It's all very complicated subject because the moment you say equity, then what will be the promoter's contribution? Whether if you're going for a public or what is the dilution which you want to do it later in the stage. And if you're having a joint venture, then what will be the exit policy for the joint venture? I will be talking about that in the future slides also. And then when you talk about the means of finance, it's not just a term loan component. you can structure in such a way that you take a buyer's credit or a supplier's credit, and then you open a SBLC, standby letter of credit. Then what happens? All these things are cost effective means. Instead of paying 11% or 10% interest on a term loan, you just take SBLC and then go to Hong Kong or go to Singapore or any other Asian country, and then get a line of credit for them, and 2% with the LIBOR cost. So it will come to what, 2.5%, 3%. Then if you do a forward cover also, another 3.5% premium. So by 6%, 6.5%, you will be able to cover the cost. So there are a lot of ways where you can structure the means of finance. Project cost is mostly determined by the total cost of the project, the land, the building, the machinery cost, IDC, interest during construction, and all these things. But when it comes to the means of finance, that is very, very important, where the professional will come and tell the management and give them different options, 1, 2, 3, 4, and tell them these are the 4 options you have, and out of this, maybe the third option should suit you better, because what will be the promoter's contribution and how long the promoter wants to be in the company without dilution, whether he wants to bring in a partner, whether he wants to go for a public issue. So many things we need to discuss at length with the promoter. And what type of a joint venture? Sometimes what our joint venture people might be manufacturers of machinery. So they will give you a seller's credit, supplier's credit, and they will give you machinery with a 5-year time, 8-year time at a very, very fraction of a rate. I mean, those international borrowings, if you take from Singapore today, it's only 2.5%, very, very cheap compared to Indian rates. Because of this pandemic and this thing, last few years, the rates have been very soft. But once the market looks up again, our market looks up, then the rates will go up very fast. But other countries like Europe or US and or Singapore, the rates are very, very fine compared to Indian rates. So you should always look at funding. See, all these things, what I'm talking is very much related to the mid corporate and big large corporates. It might not suit for a small SME or a mid MSME, because their fund requirement will be hardly 5 crores to 10 crores. All these things, what we are trying to talk is a medium sized project, where it is 300 crores or 500 crores of a project size. There you can come out with beautiful options, give them the cost effectiveness, and also talk about the swaps. Maybe we take a loan immediately because you will not get the funding initial stage. Take the loan Indian INR rupee. Then once the company completes the project, then go and do a swap, maybe in US dollars or euros or whatever it is. Try to do this thing with a complete cover, so that you do hedge the risk basically, so that you reduce the cost of interest. At the same time, there's a mitigation of risk is also taken care of. So there is a vast ocean of this is beautiful subject. I mean, any professional who has knowledge of finance and has a passion to do a structuring, I think this is a fantastic thing and very well paid. And see, what happens is any TAV project, when you start, it takes minimum 2 to 2.5 months for you to complete it, evaluate it, because at least 4 to 5 times corrections will be there, and we're closely working with the company, and they will be giving a lot of inputs. And that means the bonding with the company will be from the initial stage of the project inception itself till the project is completed. It's not only this particular role. You may be associated with completing a joint venture agreement with them, or fundraising, or so many other things apart from this techno-economic viability. Can we go to the next slide, sir? Sir, actually, what I personally feel is, if we can complete 3 or 4 slides, then give some break, talk to people, let me understand whether they understand what I'm trying to talk, or no, am I doing so fast they're not able to understand. So why don't we complete this slide and then talk to people, understand if they have any questions. Why don't we answer that?
Yes, sir, but this is webinar model, so we might not able to unmute the participants from there, and we can just take response from chat box, and I'll let you know, sir. Okay, and we'll take a response from the audience.
Okay, fine. That's good. That's good. Let me finish this valuation part. Valuation is a beautiful subject, but this valuation, it's not that every cup, it's a cup of it's a cup for everybody. It requires more in-depth knowledge about the business environment. It does not include only the financial parameters which you are reporting. It has a lot of other things which is beyond the finance, which has to be reported when preparing a entrepreneur's report or valuation report, because you do a peer value comparison, and then you discount the future earnings of the next 4 years, 5 years, and what is the technical USP you have compared to your peer manufacturers or technological partners, and what type of a comfort you are giving to the joint venture partners. So there are a lot of things when you prepare a entrepreneur report and business valuation report, because nowadays a lot of investors are coming to India and they want that good businesses. They're looking at good businesses to invest, but they are not finding a good paper. I mean, a business valuation report which can speak for itself. They're getting bits and pieces. So if somebody can generate a beautiful business valuation report which can address all the issues of finance, non-finance, technical issues, everything, and then come with a valuation saying that this is my valuation. And then the valuation report is also required by the banks. It's not that just required only by the investors. And then startup valuation. This is the hot topic today. You are finding so many startups today in India. Every day new startups are coming. The moment they start up, within 6 months to 1 year, they say they are $500 million worth and $800 million worth. How are they valuing? What about the IP valuation? So here, I think these chartered accountants can play a wonderful role in valuing the company, giving a systematic, they saying how they have valued the company, what is that thing which you have taken it, what is the multiple X they have valued the company, and how are the investors going to benefit out of it. All these things can be addressed very well, and also IP valuation is a beautiful area which has to factor into the technical company, because most of the technology oriented people, they have a lot of IPs filed, intellectual properties filed. Those has a lot of value. So because the valuation of startup, why did it goes up overnight, 500 million, 800 million in a short span of 6 to 8 months? Because their technology is so great. They are talking about new latest technology. And then coming to valuation for disinvestment, mergers, acquisition. See, any merger, or if you want to do a disinvest, like government of India now is trying to disinvest a lot of Navratnas, mini Navratnas, or big companies and things like that. So there is a set of valuations which normally we do. And then when we are talking about a joint venture or investment, strategic investment by a partner, he will certainly like to have the valuation and see what type of disinvestment they want to do, the promoter want to do, or the earlier Series A, Series B, Series C people, how they want to disinvest their holding. And the similarly, same case with mergers and amalgamations. So there is a large scope, and these are very well paid, and it requires a lot of time for a chartered accountant to spend on that. It's not that you just do a audit, monthly audit, yearly audit, spend 2 months, send your juniors, and then the final stage you go and see main things, and then you set the balance sheet. It's not that. Here is a different ball game altogether, and every industry is typical. Every business is different. So you have a lot of knowledge. You get a lot of knowledge to learn, a lot of new things to understand in the market. The market dynamics change very soon, and the requirements of the investors changes. So I think this is a wonderful area for a chartered accountant to work from. So what about these things? Are we taking some questions now, or should I have to continue with this?
I've asked for the response, sir. You can continue, and if there is any, I will sir, like yes, and also
Okay,
for proceedings of the
can
session, correct pace or
okay.
something, we'll check with the audience.
Okay, fine. Can we have the next slide, please?
Yeah, please.
Okay, this is an area double taxation. This is very important for both NRIs and foreign companies. See, double taxation today, most of the companies, we have treaties with most of the countries. India has a lot of treaties with most of the advanced countries. Name most of the big countries, we have treaties where double taxation treaty is there. Because a lot of people they pay huge taxes in one country, host country, and then they bring the money back here in the other country where they are selling. They are supposed to pay again tax. So what they try to do is they try to set up a portion of it, a major of it, whatever has been paid in that country, as per the treaty. It all depends upon the treaty and the agreements what we have with different countries, and then DIPP approvals. See, most of the foreign companies or joint venture partner or people who want to set up their offices or businesses in India, they come to India, and first thing is they would like to ask somebody, do you have any chartered accountant who knows the work of DEPB? We need to be apprised about the Indian rules, regulations, the policies, and we want permissions and approval from the government. So some good chartered accountant we have, can you refer? So the first question they are going to ask. And then preparing a joint venture agreement. Once you get a joint venture partner, then you will be scouting for a joint venture person in India. So you will be responsible to get an equal good partner for them, and then prepare a joint venture agreement. Exit clause. Exit clause is a very, very important thing. Like, when the joint venture agreement, what happens when 2 people or 3 people sign an agreement and invest? What is the exit policy? Like, are they going to come out with a public issue, or no? With first right of refusal to buy back the other people, at what rate? What will be the valuation for that? So many things we need to address in the exit clause. Then taxation policy of the two countries. This is very important. Like you have been seeing what happened that tax recently, which has been scrapped by the government. So many taxation issues will come, whether it's the host country or the country where it is invested. And then you structure the promoter holding, because some countries don't allow, beyond a particular thing, the promoter holding should be diluted. And here in India also we talk about, no, if it is 51%, then it becomes subsidiary. So many things which we need to take into account before we finalize the structure of the promoters, whether it is a joint venture partner or the Indian holding, whatever it is. And then dividend policy. See, why people invest? Because they pay dividend, or they get a very good offer at the time of exit. Valuations will go up. So they would like to know more about the dividend policy, taxation policy on the dividends, how it is done in the host country. And very important is the ease of business doing. See, any kind of company trying to set up a base here or a joint venture, they wanted to know so many rules and regulations we have. The companies that we got RBI regulations. I mean, if the NBFC, we have so many regulations. So they would like to know what is the ease of doing business, what are the compliances we need to do, how things has to be done, and they wanted to themselves to know about RBI guidelines, because if they want to repatriate their investments, what are the guidelines for that, and how it is done, whether the foreign currency is free here to transfer the amount, or there are any restrictions. So many things we need to address. As a chartered accountant, I think this is one of the areas where very, very few people are working. If somebody gets updated with the RBI guidelines, DIPP guidelines, and all the things about foreign companies, it's a niche area for any professional to work. So can we go to the next slide, please? Yes, restructuring. Restructuring of business is the need of the hour today. If you take last 6 to 7 months, I mean last 2 to 3 and after 2 to 3 years, because of the market dynamics and maybe because of the pandemic, a lot of business have gone into a little bit of problem, and some companies become NPA. They have been referred to NCLT, and after the insolvency laws come into effect, most of the banks are referring the cases to NCLT. So here what happens is, if it's a bankable proposition, you do a beautiful restructuring and a beautiful business plan, revamping the whole business, existing business, study the existing business, come with a beautiful restructuring plan, come with a plan which can rebring the company to the business. Go to the bank and tell them, but this is a restructured plan, and the existing loan can be restructured, and the company can come back to life, and that will be haircut by the promoter. This will be haircut by the bankers. I mean, there are different restructures which we can do, and then go to the bank and talk to them, and they're willing to talk to us. If those things fail, then only we go to the NCLT and then insolvency. In insolvency also, the valuations are required. People have to help the insolvency professional in finalizing the total finances outstanding. So many financial things which is there, which we need to address. So this is the restructuring of business. Is now a lot of professionals are working on that. But what happens because of this RBI guidelines? Somebody who is interested in this industry or in this line of business should be well versed with the latest insolvency provisions, RBI guidelines, takeover norms, restructuring norms by all different banks. All these things should be updated. Then what happens? You'll be able to prepare a good restructuring plan, which will certainly help the bankers and also the company together, so that you can revamp the business again. Yes, sir. Can I go to the next slide, please? Forensic audit. This most of the people would be doing it. Maybe in the audit also you might have come across this one. But here I am not just going to talk about the forensic audit in general, but here there are two specific things which I want to talk. One is because whenever the company becomes NPA, the bank, since that there is some promoters, some manipulation done by the company, or there is some problem with the company, they, in general, normally they tell the CA to do a forensic audit to unearth actually what is the true health, whether there's a real profit or whether diversion of fund, whether the promoters are not brought in the equity or there is overvaluation of any asset. I mean, there are 150 things which the bank wanted a CA to go through in depth, do a forensic audit, especially when there is sales proceeds, or whether it's accounted for, or any entries which is not actually there, which is figuring in the books. So many things which we come across when doing a audit. Here, this requires more professional knowledge and also industry knowledge, because it's not general audit what normally you do, because there is a problem in that industry. So you need to be more understanding about the industry, you have more knowledge about the industry when you are trying to do an audit of the, doing a forensic audit. Then comes to investors. See, when the joint venture partner wants to invest, or a foreigner wants to invest, or any private equity wants to invest, first thing is he'll come to a chartered accountant and say, boss, I am interested in doing some investment in this company. This is my initial term sheet. Why don't you, I will appoint you as a forensic auditor. Why don't you do audit? Here, he is not interested only in auditing the financial books of the company. He says, apart from the financial books, you also do all the legal compliances of the various laws, whether all the requirements of the laws of the company, country, pollution, PF, tax, gratuity, all the statutory compliances, whether it has been adhered to, then give me a complete report of that. Because the initial term sheet will not be the final term sheet when you go for a final agreement. It all depends on the forensic audit report given by you professionals. You really tell him that this is the real balance sheet of the company. These are the things, legal compliance which is not been done by the company. These are the underlying transactions or the court cases or any problem with the GST or customs or income tax department, which is all there in that, which has to look into. Or there is some serious pollution problem which has not been taken care by the company. See, all these things you will report in your forensic audit apart from your financial business. So a knowledge, because you people also have greater knowledge in all the other compliances, statutory laws. I think this is a fantastic area for somebody to work for. So can we have the next slide, please? Yes. Okay. This is a beautiful topic. You might say, what is arbitration doing in a CA seminar? We are all finance people, chartered accountants. How can we handle arbitration, which is completely a legal thing? I certainly disagree with you people. Even though I'm a company secretary with a legal background, but my core strength is finance. See, what happens is, last 5 years, I have fought 4 international arbitration cases in US. See, that's a beautiful area to work with. There are a lot of joint ventures where you have Indian counterpart and then US counterpart, or you have a other country counterpart, but fighting the cases in American Arbitration Association that is held in New York, or sometimes in Singapore. These are the major countries arbitrations of for international arbitrations. But London is the area where government and private people normally fight with. But normal commercial contracts are generally fought in USA, that is New York American Arbitration Association, and then Singapore Arbitration Board. There, what happens is, as a chartered accountant, you have a fantastic opportunity to do a financial model and then damage model. What happens is, whenever you have a joint venture agreement, there is one partner who is really running the show, their day-to-day operation. The other person is only an investor. So mostly this person who is investing will have some doubts, and certainly then they will say, okay, my money what I put in the company got lost because it has not been done properly, or he has siphoned off the money. There are so many issues will come up. Then what happens when they go to the arbitration? Because today going to the court and getting things sorted out, it's expensive and time-consuming work. So that's the reason most of the contracts, whether it's the joint venture, commercial contract, supply contract, assignment of intellectual property, or any other thing, you normally have an arbitration clause. And these arbitration clause have a 90-day period or 180-day period or a 1-year period. So within which the arbitration has to be completed. And this arbitration normally has a 3-member arbitrator. One is appointed by the one person joint venture partner. The other arbitrator is appointed by the other joint venture partner. And the third one is appointed by both these arbitrators under the supervision of the arbitration association there in that particular country. Where the opportunities for CAs are that great that in each contract, ultimately it ends in some financial damage. They'll say it's the $800 million damage claim or the $1 billion damage claim. How is arriving at the figure? You people are going to prepare complete financial modeling. That is nothing but you have a huge data of last 10 years, 15 years data. You compile the data and then you prepare a complete modeling of that. And then you take, like, for example, we fought a pharmaceutical case. Then we went to the International Pharmaceutical Association. We got all the details for last 15 years for that particular metformin, that product, worldwide sales, region-wide sales, country-wide sales, and then we took all the details of this company for 15 years, how it was done, what was the sales percentage, what was the revenue model in that, and then completely prepared a financial modeling. And then for the next 10 years, till the contract was there, how much damage has happened for that this thing. Then we arrived at a figure. And after that, we were called in the association of the arbitration to come and make a presentation to tell the arbitrators why we took this as this thing and how did we arrive at the damage model. That was a fantastic experience and very well paid. I can tell you that they normally pay $800,000 per hour, and if you're doing very well, it can be up to $2,000 per hour. And these things run at least 2 to 2.5 years each. This thing, because before you file the arbitration case, at least 6 to 8 months time or 1 year time, you do preparation from your client's angle, because whoever it is, whether it's joint venture partner in India, mostly it's Indian company only will help take the CA's help in preparing that, because they want somebody of their origin to help them to understand how the cases work, and you can integrate in, you can work with the other arbitrators also. So it is at least 1.5 to 2 years work, at least 1 year work before you start the arbitration. Then go back to the arbitration. After the arbitration is given, the award is given, then you go to the court to implement the award. So all these things are 2 to 2.5 years time. And these 2 to 3.5 years time, I mean, the importance what they give to the CA is something phenomenal, which I've seen, and the respect what they give to the profession, and the payment what they are made to the professionals. All these things are, and you learn a lot of new things, because you learn a lot of new international arbitration acts that countries act, because that's very important for when you're trying to pitch in a financial modeling, because you're very, very good at finance. But any additional knowledge of this thing will certainly be added value for the arbitrator, I mean, for your profession. So can I go to the next, please? Private equity. Private equity. See, there is no company which does not want fund, especially promoters in technology space or in good brick and mortar companies are looking for funding from private equity. For Asia, we work with a lot of private equity firms from Singapore. Singapore is, is a hub for the finance, this thing in the Asian country. And even in India, a lot of private players are there. But when you talk to Singapore companies or the US companies, their way of looking at private equity is something very, very different, because they're a mature market and they understand technology, especially when I'm talking about technological or technosophy companies or startup companies. See, their valuations are different and they like technology. They are willing to pump in huge money into private equity as a private equity investors. Because even the Singapore funds are there, private equity fund, high net worth investors fund are there. Those people are waiting for opportunities. Here, the CA can play a beautiful role. You go and talk to a company, tell them that I will be able to prepare a beautiful report about that is the enterprise value report, and then pitch in that value report with the private equity investors, preferably in Singapore, and go and meet them, talk to them. They are very happy to look at India, because India is one of the favorite countries for them for investments. Because now things have changed, a lot of regulations have been very, very comfortable. It's ease of doing business in India, and the Indian policies are very eco-friendly. So a lot of people are ready to bring in large capital as a private equity team. There is not only just getting money. Before that, you need to do a lot of job, like doing a valuation and then shareholders agreement, then prepare the basic term sheet, exit policy. The valuations are important. Then talk about the dividend, double taxation, dividend, everything in the report. Then go and present it to the private equity player. Then they'll be very happy to get associated with you. I mean, this is an opportunity people should look for. See, basically what happens is at least 70 to 80% people would like to go into employment the moment they complete the CA. Maybe 15-20 people would like to go into practice, but maybe 1 or 2 people will be interested in going beyond audit, beyond the regular thing. So these are the areas which I am thinking that somebody should focus. So what happens? This is you will be a special person. Like somebody wants a private equity, then I'll go and talk to the CA. This guy does this type of work. So I mean, it's a niche area to work for people like you. Yes, sir. Can we go to the next slide, please? Loan syndication. See, this loan syndication is a beautiful area because we have been in this line for the past more than 25-30 years now. And predominantly, we have been working with mid-corporate companies and doing both working capital, term loan, funding, non-fund based, fund based. See, loan is required for regular working capital, for expansion, restructuring, whether stopping of funds, low cost of funds, or ECB, national commercial borrowing, or supply credit, buyer's credit, commercial paper, short-term funding, LIBOR or MIBOR link fund, or hedging. See, what happens in loan syndication, you might start with initially a small term loan with a working capital requirement for a small company. But once you have experience, then your specialization will be more in starting of funds. Today, all these big corporates, they're looking at very, very low cost of funds. You should be specializing in the MIBOR link fund or GSEC fund for that matter, or you can hedge the fund with other currencies with completely, depending, suppose somebody is doing export in euros, and you can hedge the currency in the euro currency. So that because natural hedging will be there, because revenues coming in euros, you don't need to do a forward cover. That means you save that forward cover premium in that. That means you will be doing a costing with what 1.7% or 1.8% compared to around 8.5% or 7% what the company is paying in India. Or you can link it to our LIBOR market, that is London Interbank Offer Rate. By December, I think LIBOR will all go now. Or you can link it to MIBOR market, which is the Mumbai Interbank Offer Rates. I mean, those rates are nothing but a bank-to-bank rate. One bank lends money to the other bank at the particular rate. So you can link up with the MIBOR rate with 0.1% or 0.8% as the coupon rate. Or you can raise CPs. CPs, commercial papers also can be raised. See, all these things are again a specialized work. Very, very few chartered accountants are able to do this type of work because this requires a little bit of a hard work and a knowledge. Apart from that, yes, you should have the right contact in other banks, especially these foreign banks from Hong Kong and Singapore. All these people are very happy to do a buyer's credit for you or a SBLC. You just go to a bank and tell him that I don't want it, I want a term loan, but you give me in way of a LC or SBLC, preferably SBLC. Take the SBLC, go to Hong Kong or go to Singapore, and they will give you at a very, very cheap rate. Even though you pay 1.5% commission for opening a SBLC, a standby letter of credit, you get it a fantastic rate. The total cost will not be more than 4.5% or 4.6%. Still, you will be saving more than 4%. So all these things are very, very important when I'm talking about a 200 crore ticket or a 500 crore ticket. So these are the places where professional knowledge is required, because no company or promoter will be able to do all these things. Only chartered accountants with professional knowledge and knowledge of finance can only be the answer for that, and they will be only the people who will be able to get all these things done for the companies. Yes, sir. Can we go to the next slide, please? Mentor for startups. See, today you can find a lot of young generation people with 22, 23 years finishing their IITs, IIMs, and come with beautiful tech ideas, new technology. They start up a beautiful startup companies. They are absolutely having no clue about what finance is, and they don't know finance. They are very, very good at technology. Their CAs are the only people who can rescue them from the incorporating of the company, getting all the necessary permission, and then structuring their funding, help them getting the Series A, Series B, Series C funding, valuation, then talk to the venture capitalists, raise funds. Very important is filing of IPs, and then statutory compliances, advising them about the maintenance of books. What happens is here, valuation also again comes to a very important area. The moment they are 6 months or 8 months old, they talk about $600 million valuation, $800 million valuation. Again, they'll come back to the same chart accountant. Sir, you please prepare a valuation report for us. and help us to raise additional funding or dilute our stake. And they come up and say, okay, the IP is valued this much, the intellectual property is valued this much. The technology, what we're talking is the robust technology. This is the only technology we have compared to the peer group. So many things they talk about their technology, technical know-how. You are the people who are able to really put in on a paper and do a valuation for them. So I think this mentor for startups are the new areas where charterments has to really look for. And they're all young blood, and you people are also very young now. So I think this will really match you with finance knowledge and they with technical knowledge. I think both of you can do wonders. Yes, sir. Can we now go to the next slide, please? Mergers and acquisition. I already spoke about this during my earlier slide. Very good area for people to work for, especially the swap ratios, the pricing ratio, preparing. So mergers and acquisitions are which it requires a little bit of experience, at least 8 to 10 years of experience for people to get into that, because it's not a very plain vanilla structure. It is a very complex structure. So many issues are being has to be taken care into, especially taxation, the merger proposals, the swap ratios. They get different if it is two different joint venture companies, how it has to be done, DIPP permissions, so many legal compliances, due diligence. But this is the area one should also look at once you have a little bit of experience, maybe 8 to 10 years of experience into funding, structuring, and syndicating. I think this area is a very great area to work for. Yes, sir. Can we go to the last slide? Okay, this is a new area where I have been speaking to quite a lot of people now. So what happens is earlier chartered accountants were just trying to go do the audit, help the company to file the returns and things like that. Now most of the SME, MSME, and also some of the corporates, they are feeling that this statutory compliance has become a big problem, and they wanted this to be outsourced. So I think you should look at this area. It's you just have maybe 15, 20 BCom graduates and train them, and you start taking care of the maintenance of the books of account, then preparing books of account, GST filing every month, PF return, graduate return, all statutory compliances, help them in the board meetings, minutes, then preparing and finalizing and helping in preparing the profit and loss account, balance sheet. And some of the companies, they don't know how to prepare input cost and also selling prices because they don't know the costing this thing. So help them saying that these are the input costs, we need to take it to that, and these are the things which have to be added to that, so that you get arrive at the selling price, this has to be done. So these are the things which there is a huge market, very huge market. And sitting in an office, you are not only doing audit, but only problem is you cannot do the audit for the same company whom you are doing this maintaining of statutory records. So, but this is a beautiful area that few people have already started, and many companies, even I was told, big corporate giant MNCs are giving portion of their work to these companies. In fact, I have seen a lot of my clients for all 1,000 crores, they also give part of their work to the outside people, outsource the GST return because it's a cumbersome process, and because they have huge number of invoices every month generating. So they want some outside expert people to do all this paperwork. So this is the area where you can hire people, get them trained, and then you can do it. I think this is a bread and butter for a chartered accountant like you. Yes, sir. Any other slide for me? Okay, system development for MSME and SMEs. We have been interacting with few of the SMEs whom we have been consulting. So most of the time when we go and see their books, nothing much is because they give some statement to the bank, they prepare something for GST, they do something for the audit purpose. There's a lot of mismatch in the books because they are not trained how to keep them, and they don't have a system. Sometimes some theft is happening in some of the showrooms. They don't know how to take care of these things. So there is a lot of scope for you people to develop a system for them, a beautiful system, a robust system, financial system, which will be cost effective, monitored from the head office. At the same time, it can be user friendly. I am not talking about any package, just it's not only for finance, it is apart from finance. It's not a software which I'm talking about a system which has to be developed by the MSME, taking into account the statutory requirements and all the thing compliances which has to be taken into account by these people. So this is the area, there are some people who are working with them, but this can be clubbed when you are doing outsourcing. When you're doing outsourcing, those people you can tell them, sir, apart from outsourcing, we help you in developing your system, because without the systems in place, you will not be able to do good work, because whatever the information you get might not be 100% accurate. So systems also should be in place so that you get accurate information for doing your job. Yes, sir. Can I go to the next slide?
So the
Okay,
slides.
so can we take questions? We have a lot of time to answer.
Yes, sir. 1 minute. There are 2 questions came up till now. So 9th and 10th.
9 number. Okay, any course that I recommend if you want to increase your knowledge for getting into valuation business? So first thing is valuation of business. When I say it's valuation of business, it is not only financial valuation, it also requires valuation of non-financial terms. So first thing is knowledge of the particular industry is very, very important. So when you're working with a client, 80% of the knowledge you will get it from the client itself, because he knows the business better than anybody else. And apart from that, there are a lot of seniors who might have worked in the particular area. You might take their guidance from that. So there is nothing which we can recommend, because today you might be doing a valuation for a technical company, and tomorrow you might be doing for a cement manufacturing company, or then go for a chemical manufacturing company. So knowledge is ocean. It cannot be, financial structure or valuation or financial part can be done very easily, taking all the records or financial statements of the company. But non-financial thing is very, very crucial, because that creates a lot of value into the value addition and valuation of the business. So I think the company promoters and the company will be the right people to guide you in this. How do new charter accountants who may not have experience in one of these areas get into medium and large scale services? Sir, basically, it's a very, very good question. Like new chartered accountants, yes, my addressing to my address is to the young chartered accountants only. This is the area you get a lot of business. See, basically, first you need to talk to SMEs, mid corporate, and MSME businesses only. Because large businesses will not take services of the people who are in an initial stage. They require at least 15 to 20 years of experience in taxation and different compliances. So that now when there is a problem, because their problem will not be so small, it will be a huge problem, because they have normally at least 30, 40 charter accountants working in their office. They have a director of finance, a vice president of finance, and other line of people. So those people, most of them are charter accountants, and some people with IAM background also. So going to large businesses initially would be a difficult task. But your focus should be more on the SME and mid-corporate people, where they will not be able to spend a lot of money to appoint a CFO paying 2 lakhs or 3 lakh rupees per month salary. There your knowledge is useful. You will be paid well for your services, and it will not take much time. You might take at least 5 to 6 assignments in a week, maybe spend 3 hours in a day in a week. That's all, which is each of the clients. So I think you need to concentrate on these segments first. Sir, best career path is, I have given you so many options. It depends upon each individual, each area where he has interest. Somebody has interest in valuation, somebody has interest in arbitration, somebody has interest in outsourcing of finance. So it all depends upon the area of particular interest where you have. But there are so many areas which I have already listed out. Maybe whatever you like, you can choose.
Those were the questions. I have given unmute option to the audience, those who joined in the app or mobile app. If they have any question, they can unmute and ask. Else we can wind up. Let's see, wait for some more minutes.
Sure, sir.
A nice presentation, sir. Thank you very much.
Thank you, Raj, sir.
Good evening, Sundarajan, sir.
Thank you, sir. Thank you so much.
Namaskaram.
Namaskaram.
No questions, it seems.
Yes, it seems that we've exhausted. I give an option to unmute themselves. If there is any, we can post it in email.
Okay, then we'll, shall we close it? I think there are no queries.
Thank you so much.
So thank you, sir. Sir Sundaran sir, I had requested you to introduce the speakers.
Last time.
Oh, one. There are one question, sir. Any professional or organization?
I think we should work on this first. Yes, if any professional wants to learn the trick of TAV report, techno-economic viability report, and getting into the structuring and funding, then I think it's better to join an organization which deals exclusively with the techno-economic viability report. There are a lot of agencies like Signals and Finance and so many agencies in India. They work for large banks because any proposal goes to the bank, it is referred again to those private agencies to prepare the TAV report. Once you go and work there for at least 1 year or 2 years, you will exactly know how to structure an organization, how to structure a funding, cost of finance, cost of project, means of funding. All these things you will know about it and how to structure the particular equity structure, go to the bank, how to do a presentation, the CMA, everything you know about it. So I think 2 years work with any of these people will certainly give you a initial work, and then you can start your own after 2 years.
Okay, I think those were the questions. Thank you, Sundarajan sir, for initiating because we were held up in another meeting up to almost 5:36, and again I had to go to branch for some emergency work. So I should thank today's speakers in absentia, Ravichandran sir, company secretary from Hyderabad, and also Mithun Jayaraman sir from Bangalore for their presentation on opportunities in finance advisory services and business analysis. This is an area where you see there are so much of vague what ideas are there in the members. So your guidance will definitely would have thrown much light on them, sir. These are the topics which are not at all dealt with, and we for the first time have taken up that one, and you are the first person on the platform here to take up accounting and other compliance services, for which I thank you very much, Ravichandran sir. This is very important what's called activity to start with, because I have been seeing the number of the professional opportunities for small and medium enterprises, especially youngsters, and the number of CS coming out. It is very disproportionate, especially last 2 years. Last 2 years, I think it takes some more time. This is what I have written in even leaders thought for SIRC this time. It will come tomorrow or day after. That will not match. It will take at least 1 more year or 2 more years for recovery of the economy to the normalcy. So in these conditions, so SMEs are the real backbone of our country. MSME units are the most affected. They contribute more than 40% to the GDP of the nation and around 60% for employment. But still, they are not able to survive despite the initiatives taken by the government. There is a big gap between initiatives and the troubles that they are facing. So what I would suggest, not as an expert, only to supplement the speakers' views, that please come in groups. First point, 3 to 4 young CS, you come together, specialize in each area, and as a team, go to some senior chartered accountants and contact the district chambers of commerce, local district chambers of commerce, and go there, identify what are the industry specific. For example, in my native, jeans ready-made is the major industry, which is there for 100 years. So which is not there in other places. So you cannot ask these questions to the speakers, where to do, how to do. You have to innovate yourselves. That is why, that is how our course is structured for. So please contact the district chambers of commerce, and there for each industry sector there will be associations. So contact those associations, bring them to the platform of the chamber of commerce at district level or taluka levels, and ask them what are the problems they are facing. First of all, we should identify the problems. We should take that initiative with the help of senior chartered accountants, who will definitely help you in contacting the chambers of commerce from senior CAs. Some CA would be auditor for them, statutory auditor. So if you go there, and industry specific issues you should study. That is number one. Number two, what are the remedies for that? If you in group, you make a study based on the guidances given by both the speakers, and based on that, you can find the opportunities going there. Gone are the days where you pass this examination, take a certificate, open an office, sit under a light and fan and AC. Gone are the days. You will not get the practice. So you have to be proactive for that. So this experiment I have been doing in my place. This is one idea which I want to give you. Number two, another idea in MSME sector is there are so many new sectors which they are opening up. For example, the agriculture produce food processing. The farmers, they grow the crops, but the processing is done by mediators. These things can be taken over to the rural areas, wherein the 1 lakh crore rupees is sanctioned through to these activities through NABARD scheme. So please contact the NABARD people and try to find out some investor or promoter. See that these activities are done, and try to get them subsidies. And there are special subsidies even for women, and also loan facilities. APMCs can be formed at private agriculture produce marketing committees can be floated in your village. Small village, there so many CS are passing. Your words will be definitely heard by the senior members, senior citizens in your place, to promote some people there. So try to understand what are the schemes that are there by central government as well as state governments to promote new MSMEs. Find out those areas, and also try to catch up with some industry officers, and try where all you can sell those goods, even including exports. Export license is not at all a problem. So you go to the extent of exporting these food processed items to the outside countries. It's like this, you should be innovative and also take these opportunities. The suggestions given by the speakers is only a guideline. They can only coach you, but they cannot teach you. This is a single statement I would make with reference to these things. So with these words, we at SIRC are always ready to conduct programs on these areas. You must have seen so many programs were conducted in this year, only to specifically identify the new areas of opportunity and promote the young members to enter into those areas. So these traditional areas are gone. There is a report from World Economic Forum in 2020 October that out of the 18-19 professions, ours is the fastest job loss profession due to automation. So we have to make use of this challenge or this difficulty, convert them into an opportunity with the help of the speakers today, both the speakers. Like they can only guide you, and our course is a postal course. It is not a, it is training course. We are article trained. Under the articleship, you have learned how to tackle each problem differently, innovatively and professionally. And these guidelines, you please come together, take the guidance of senior chartered accountants. Where are the areas? Take the guidance of the senior officers, bankers, NABARD especially, to move forward. And it takes time. You have to have patience. And another important thing which I wish to tell you is most of the youngsters, once they think that once they pass, they stop reading. No, there is no end for that till the last breath, till the last day of your profession. If at all you want to be in the profession, you should keep updating. That there is no way out for that. So with these closing remarks, I thank both the speakers for their time and their knowledge sharing, passion for this program. And I also thank Sundarajan sir for taking up our responsibility in the absence of chairman and myself. I'm secretary, so we could not be here because we had some 2 other meetings. So I thought it is not right on my part, at least if I don't join at the end. So I joined, and I wish to thank all the attendees also for your interest that you are showing. And once again, I thank all of you, and thank the chairman also in absentia. And we'll close for the day. Please make sure that you come together, grow together. There is no single growth. Singly you cannot grow. That is the level of the difficulty or advancement in the technology. We are with you to conduct.
We can grow only with unity, sir.
Yes, sir.
We can grow only with the unity.
Exactly. So
And we all have to unite ourselves.
as a team,
Then
because
what
so
we
many areas are
are
there.
established.
Specializing in one area alone may not help. Specializing in 2-3 areas and coming together alone helps. So
And you cannot specialize yourself in all areas also. So
yes,
you need
yes.
all people together and build a tower.
Exactly.
That's what
Yes,
is required.
yes.
Thank you, sir.
Thank you
So
all,
much.
and also
Thank you
thank
very much,
you,
sir,
Professor Silva.
for your wise words.
Thank
Thank you.
you very much, sir. Thank you.